Let's go ahead and jump into this cattle deal real quick, because we're always running low on time, and we got 30 minutes to do it in. You know, I guess the very first statement I have up there is that every sector is profitable right now. The key is right now, because we've seen some shifts in the market in the past month or so that could result in some sectors falling out of profitability if we keep on that path. We'll talk about those and how that's going to play into the market. Prices have been fairly strong. The calf market is actually really, really strong. A lot of that calf market has to do with the fact that we're coming into grass fever type months, and that's what's driving that market. The feeder cattle market, on the other hand, has seen some softening. So yearling cattle are getting a little soft, and we'll talk about why that is, and then we'll see if there are any opportunities right now to add any weight. And most of the previous months that we've talked about this, there has been opportunities, and we'll see how that plays in to today. I tell you, finished cattle prices have been really, really strong to start the year. We lost $3 though last week, and so when we think about these prices typically peaking in the spring months, right as we head into grilling season, I find it hard if you look there at that dotted line, which is representative of 2017, I really find it hard to believe that 2018 can make that type of run as we saw in 2017. The peak last year was a little later than normal, but I find it's going to be very difficult for us to push up to 145, 144, 145. I actually think it's going to be really difficult for us to break the 130 price. If we got up to 133, 134, I'd be very, very impressed as at any 1 week. For us to hit 133 or 134 would be very impressive. And I just think there's going to be tremendous resistance at the 130 mark. And I'm not saying we've already seen the spring high here in late winter, but it's going to be really, really difficult to beat 2 weeks ago's price. Here's showing that lightweight calf price and how it's escalated. We've actually gained, since the first of the year, we've gained $18 a hundred, which is nearly $100 a head. So buying them today versus buying them 2 months ago, we're talking about $100 a head difference on these calves. So if you've been in the selling business as opposed to the buying business, then the extra $100 a head has really turned the profit margin in a cow-calf operation around. $100 can end up being the profit that we make in this business. And so there again, though, we don't have a whole lot of people that have five weight calves ready to sell early to mid-March due to our traditional calving seasons. Here you can see where now these are auction run cattle, but the 7 to 8 weight steer price has not been nearly as positive. We've had about a $9 per hundredweight increase in prices since the first of the year. Well, $9 times 8 is what's that? 64, 72, right? So we've gained $100 in calf prices, but we've only gained as much as $72 in yearling prices. So on the swap on that, that's just the swap is terrible from a stocker producer standpoint, and it also doesn't make growing those calves as favorable. When you have a really strong price for lightweights and you're not seeing the same reciprocating market in the heavier weights, it doesn't, even for those guys that are cow-calf producers that want to add a little weight, it's not necessarily helping you on the feed through. I tell you, this is something that I want to touch on today, because I don't know how many times I said it last fall. If I said it once, I said it 100 times. But we always, this slaughter cow market is just so consistent, and to know that we've gained over $15 a hundred on these slaughter cows from last fall into early March. You know, we still have a lot of people that are selling these cows in October and November, right when they pull the calf off of them, and so you're selling a cow at a very light weight, and then because you don't want to feed her through the winter, you go ahead and market her. Well, at $15 a hundred, if you had an opportunity to pull that calf off, put another 100 or 200 pounds on that cow, get her back in better condition, and then you get $15 more a hundred, I bet I have a good feeling we could probably actually pay to feed her through the winter. That also comes from the standpoint of, instead of running stocker cattle, there are some opportunities in running stocker cows from the fall into the early spring months. The situation that you look at there is they just eat so much more than a calf does, and you're not going to get that same conversion. But those animals that are thin have really, really good conversion rates at the very beginning. So a thin cow that is her typical mature weight would be 1,300 or 1,400 pounds, and we've done pulled her down to 1,150 or 1,200. She's very, very efficient for that first 150 or so pounds. So in the future, I think we need to continue to look at this opportunity. It might be okay to hold some of these animals through the winter, even though we think we just don't want to feed them because we don't have enough hay or we don't have enough grass. There are some opportunities to add weight and to maybe better our situation and make $1 or $2. The meat production, it's amazing. We're slaughtering a lot of cattle. In 2016, heifer slaughter was up 5%, steer slaughter was up nearly 8%, and beef cow slaughter was up 14%. So realize that those numbers are following a time period when in 2015, we weren't harvesting hardly any heifers. We weren't harvesting hardly any cows because calf prices were so high, we were retaining everything. Now, the one thing that we can look at for consistency is steer slaughter, because those animals are going to the market. They don't have any other option but to go to the market and be harvested. So the steer slaughter is actually going to show that growth in the true herd size and what we would think of as herd size. The heifer slaughter and the beef cow slaughter is going to give us some ideas of what's happening retention wise in the cow herd and how high we're going to go as far as numbers are concerned. But in 2017, we saw continued increases in heifer slaughter. So we're seeing more heifers go to the market. Why are we seeing that? Well, because prices are a little lower. There's not as much incentive to retain heifers to breed. But steer slaughter was only up 2% in 2017 relative to 16. And then beef cow slaughter slowed a little bit, but we're still slaughtering cows at a pretty rapid pace. Now let's look at what's happened so far year to date. We still have heifer slaughter up 4.4% so far year to date. That was as of last week, I guess, or 2 weeks ago, because of the delay in slaughter data. And beef cow slaughter is up 10.4%, whereas steer slaughter is only up 1%. So we can tell that without using inventory numbers, if we were just looking at steer slaughter, we can tell that cow retention and calf production is slowing down because that steer slaughter rate is slowing down. Now, one thing that has hurt us so far, we have slowed down slaughter this year, and the first couple of weeks of the year were really slow on slaughter levels. And that wasn't just cattle, that was in pork and that was in poultry. But we had several weather factors that played into the inability to move cattle to slaughter like we would have expected. But these are just some things to note, because what it comes into is it comes into that meat production. So 2017 meat production, beef production was up 4% compared to 2016, pork production up 3%, and broiler production up 1.5%. And so far, year to date, beef production is up 3.1% so far this year. That's, I mean, when you see a 4% increase last year, and are we going to keep up with this rate of 3.1% throughout the year? I think we'll easily keep up with this 3.1%. 3% is very easily reachable for the entire 2018 year of beef production being over 2017 beef production. What does that mean? Well, I think that before we tell you what that means, let's look at pork production. Again, up nearly 3%, which is almost identical to how much it was up in 2017 compared to 2016. That we're talking about strong production. Broiler production is down nearly 1%, But if we took away the first 2 weeks of the year, broiler production would actually be above year-ago levels. So just negate that this has a negative number by it, because it's truly a positive number if we could take away those reduced slaughter levels on broilers. But in the end, what does this mean? This means that we need to be able to ship beef out of this country in a hurry. We had a really, really strong export market in 2017, which supported prices tremendously. If we don't maintain that level and potentially increase that level a little bit, we're going to see more pressure on prices. And it's not going to be just because we have more calves out there. It's going to be because we got so much beef, we can't move the beef at the same price or just a small increment lower price. Because as we increase production, we expect lower prices, but we still want to maintain positive margins from a cattle production standpoint. And we're going to get into a situation where if we're not continuing to export more and more beef and pork and poultry, we're not going to be able to keep our margins positive and keep profitability in the black. All right, let's just briefly show this. As of January 1, we had 31.7 million head of beef cows. That's the highest level since 2009. So you can go back and you think about what cattle prices were in 2009, 2010, and we're at the highest level of beef cow inventory since then. And prices are by far better than they were in 2009. I think in 2009 we were probably looking at a 6-weight steer at about $1.10. If I remember my prices correctly. Sometimes my mind it's got a lot of numbers in it, and so it doesn't always. But I think we're probably around $1.10 to $1.15 for probably a 550 6-weight steer. And today we're in a lot better situation. And so what's that telling you? Well, and we could go back and look at beef production, and we've actually increased beef production because we have bigger carcasses now. And so when you think about that, that means that's telling us that demand for beef in today's market is so much stronger than what it was 8 or 9 years ago. That's what's supporting our industry as far as beef cattle production is concerned. We just have really, really strong demand for beef. This really comes into play because we start looking at January 1 feeder cow supplies. We're up in Russellville, Kentucky right now. I actually got a group up here with me sitting in a hotel room talking about this. But we're up here for the Mid-South Stocker Conference, and this is going to be a key part of the talk that I do today. Is when we look at January 1 feeder cattle supplies outside of feedlots as of January 1, you can see that reduction compared to 2017. Well, we had a lot of cattle that came off of wheat pasture or that never made it to wheat pasture that went on feed early. Because when you look at the monthly cattle on feed report, we had significantly higher placements in September, October, November, and December. They slowed down somewhat in January, and I have a feeling on Friday when we get the report for February, we're going to have a little bit lower placements again. And a lot of those placements being lower in January and February have to do with the fact that we had already placed a lot of those cattle in feedlots last fall, the last quarter of 2017. And so this number in and of itself at 26 million head that are outside of feedlots right now. Well, what does that mean? Well, I think that's one of the reasons why we're seeing a softer yearling market right now is because we've got a lot of pen space that's already been filled up, and cattle feeders are just not. They don't have a high demand for those yearling cattle in today's market. What does that mean for maybe going into April, May, and June? I think we're actually going to see a little bit stronger demand than what we see in other in previous years. So will I be right? Will I be wrong? I don't know. I guess we'll have to wait until the next quarterly meeting to see how that plays out. But I think we will see a little pickup in the demand for calves going on feed as we move into that April, May, and June time period, and probably more of that May-June time period as we see these cows that were placed in the last quarter of 2017 coming off feed and being harvested. That will increase production during that time period as far as beef production is concerned, which may put a little damper on the beef market, but that's not a bad thing, because we'll be hitting the grilling season at that same time, and so a time period that's really typically a strong domestic beef demand time period will be matching up with some of those calves coming off feed. So that could be a positive for the beef market. Can't guarantee it, but that might be a positive. We are retaining fewer and fewer heifers. Probably a better number than this is, just looking at year-over-year changes is probably not the most beneficial thing. It's probably better to look at the number of heifers, the percentage of heifers retained for cow replacements relative to the size of the beef herd. And so moving forward, there's probably a few people that are calling for the cattle herd to stabilize, the whole cattle herd to stabilize this year, or to a slight decrease. I'm still going to expect us to have a little bit bigger cow herd this year than what we had as of January 1, 2018. I think that January 1, 2019 number is going to be slightly higher. I'm only looking at a 0.3 to an 0.8% increase in the total cattle inventory. But that beef cow inventory, what I say, was it 1.3% higher than last year, or whatever that number was. We're probably going to be under 1% on the total beef cow expansion. So we'll see how that plays out. I tell you, as feeder cattle as live cattle prices went down last week, down $3, and feeder cattle prices are softening some, the beef market, the wholesale beef market, is actually trending the other direction. And packers had a really, really good week last week, and I see no reason for that to change this week. When we have some warm days, people in this country get a few warm days, man, they're ready to buy some beef and put something on the grill. And sometimes we get a little early, a few early grillers, which really helps the retail market. You also get more people going out to dining institutions and buying some high-end cuts when things warm up. And so that's been beneficial. And as this warm weather moves farther north, it's only gonna help beef prices. So I expect a very seasonal pattern in the wholesale beef market. Talking about the feed situation, let's first of all just talk about the drought situation. Those placements, as you can see, the southern plains and the western states that have been, the drought situation has actually improved tremendously in the past month in a lot of those places. But the situation ends up being the drought came during a time when wheat pasture was supposed to be producing, and wheat pasture didn't produce. So all that Texas panhandle, all of western Oklahoma that would have traditionally, and even parts of Kansas that would have traditionally had wheat pasture for grazing stock or cattle, they had the pasture, just wasn't any wheat in it. It just never grew. So they had to move cattle out early, and a lot of that demand for those calves this time of year, there's a lot of those guys that would have tried to get a second group of calves to go on wheat pasture is for graze out, and for those guys in the western part of Oklahoma and in the Texas Panhandle just aren't going to be able to do that. They're just not going to have the production. Now, the eastern parts of those states, if for what little bit of wheat pasture that they have, those guys may pick up a few cattle this spring to try to do something with, but the western guys just don't have anything to do it with. Hay stocks, because this still plays into that feed situation. We had reduced hay stocks as of December 1 of 2017. We actually had pretty good production in the southeast region of the country. The places that were really hit hard with reduced hay production would have been the northern plains. We go back to that drought situation in the Dakotas. You see where they're still in somewhat of drought, but that's a tremendously improved drought situation compared to where they were probably 8 months out of last year. And so when you think about all the hay that is produced in the Dakotas and in Montana, those guys like to turn the water on and turn the water off, and they produce very, very high quality hay in those regions. But last year they were not able to produce that hay, and so that really hurt hay production. But closer to home, we actually had really, really strong hay production. But at the same time, you look at places like Texas, and when you have a hurricane come in that dumps, 30 or 40 inches of rain, and you drowned out a lot of your hay, that hay that gets soaked, it's not going to be any good. So we throw a lot of hay out of the southern plains. At the same time, when you have these tremendously cold temperatures that we've experienced during January, that increases the amount of hay that is fed. You know, that's what's going to play into even lower and lower stocks. So when we get that May 1 hay stocks number, we're gonna have a low May 1 hay stocks number. So if you're in the business of buying hay this next year, I'm going to suggest you buy hay early and you buy it often, and you go ahead and fill up the barns, because come closer to the fall and winter time, winter months that we're trying to feed this stuff, it may not be readily available. Due to those low hay stocks, we started to see hay prices tick up. Now, granted, I know this price right here, this is a national price, and this doesn't really represent Tennessee, but recognize that hay producers could be capitalizing on a little higher price when hay stocks get low. Let's look at the feedlot right now. The latest data out of Kansas on focus on feedlots was feeding steers at about 76, 77 cents per pound on feed cost. I expect those costs to go up slightly, because we have started to see corn prices inch their way up. Aaron, talked about the crop situation, and folks, when you've got an opportunity like you've had now, where beans and corn both have been going up, and in 2017, when you were only wishing you could get $4 for a bushel of corn, right now may not be a bad time to price in some of that $4 corn if you can. Same on soybeans. But in the same time, if you're feeding cattle, when we're watching these prices go up, you kind of wish you'd already locked in some prices on feed. What I'm saying is, I don't think there's just a huge upside potential in the corn and bean market from a feed cost standpoint. But I also don't think you're going to lose a whole lot of money if you locked in feed prices today on cattle that you're putting on feed, if there's anybody putting cattle on feed. So here's the March feeder cattle chart as of yesterday. It's traded at 144.30 yesterday, which is a little softer than the day before. But we've essentially had a softening market since the 1st of February. You can go back to the 1st of February, and you can see where we were over $1.50, or the end of January time period, and we've been softening the whole time. Well, that just goes back to mimic what was happening in the end of 2017 and the first part of 2018. We just didn't have that strong a market, but the market is for March is relatively strong compared to where we finished last year on the board. Moving forward to August, the August board again has softened some, but a 152 price is really strong on the board, and I think there's people that can price in some profits if you need to go ahead and sell cattle for August. I'm not saying you move the cattle. I'm telling you, you can use the futures market to go ahead and lock in a price for the most part, and probably end up on the positive side of the market. So here's what I'm looking at as far as a fed cattle price forecast. The January through March time period, we're probably going to be around 126 on the average price, 125, 126. April and June, I'm looking for a little bit softer market. That's not typical. It's not typical for us to move down from the first quarter to the second quarter, because April and May tend to be really strong fed cattle price months. June gets soft on us, which brings that average down. But like I said, I think we've already outpaced our market somewhat here in the early months. Again, we're looking for even softer prices in the third quarter, but that's very typical. I'm probably on the high. I'm probably thinking we're going to be, as far as an average for the third quarter, probably closer to the 110, 111 than the 107, but I want to leave myself a little leeway, and then we might have a little more strength come back in the market in the fourth quarter. But what this is telling me is overall, I'm saying we're going to have fairly decent prices, but we're going to have softer prices. as we increase this beef production, as we increase the number of cattle that are out there, we're just going to be looking at softer prices moving forward. Looking at immediate sales and sales through the spring and into the summer, and also all the way into the fall, the 5 to 6 weight price there that I put up there is in relation to going through the auction market. The 7 to 8 weight steers and heifers is in relation to load lot prices. So I guess on Friday this week, we'll have several loads of cattle that sell this week through several different venues. We'll be able to see if my 7 to 8 weight steer and heifer prices are anywhere close to what actually occurred, and that's that's only trying to predict out 3 or 4 days, but sometimes things can change tremendously. I look for the market to stay pretty steady on the steers there for load lots. We'll start to see some softening in the calf market as we move into the spring and into the summer. But when you look at those calf prices, those freshly weaned calves moving into October, going to have much softer prices. They might still be an opportunity to make $1 or $2, but most people will just be covering their cost. The only way that you can trick your mind into saying that you're making money is to not count your labor and don't count your fixed costs moving into the fall. So looking at that, let's what are the opportunities of maybe backgrounding some cattle from March into August? So that's 150 days. We're going to put two pounds a day on them. I'm buying them at 169 for 525 weights, and I'm got an expected August price at 145. So I told you we were at 152 on the board, so I've got a -7 basis figured into that on August sale. So I've got an expected value of gain of $1.03. Expected value gain of $1.03 is actually pretty good. Sure, we've had some months recently where they were much higher than that, but $1.03 should be a profitable level. Is it going to be huge profits from a backgrounding standpoint or stockering standpoint? No, it's not huge profits, but in this business, we're just trying to make money, and anytime you're making money means that you should be positive. From the standpoint of moving from May to October, it's amazing. It is amazing. I don't know how I ended up with the exact same value of gain, but I'm looking at being able to buy these same calves in May for 161. Do I think they could actually get softer in May than 161? I do think they could get softer than 161. But I'm trying to be an economist here, and as an economist, I'm going to be very conservative. So I'm going to increase prices that I'm paying out there and be a little more conservative on my output price. But looking at a 142 sale price in October. So I really do think moving from March into August and then May into October, I think we have some opportunities to background these calves. The thing is, I'm not telling you to hold them 150 days. I'm just using that as my example. If all you want to do is hold these, if you're a cow-calf guy and you want to background them for 100 days, that's fine. There's no problem with that. I still think you're probably going to have over $1 value of gain, but strictly based off of my 5 month or off of my 150-day period there, I think that's what we're looking at as far as value of gain. So I do think the market is going to be favorable for adding weight at the stocker level or at the backgrounding level for those that have home-raised cattle. Any way you can sell these calves in larger groups, whether it be in truckloads or if you can just put together your own group of 15 or 20 calves. Anytime you can put a little bit larger group together, you're going to get a little bit higher price. And so that leads more credence to the reason to background some calves and grow them a little bigger. Are we going to be supported by international trade issues and strong domestic demand? Well, we have the strong domestic demand, and we hope that continues. The international trade issues are a little more up in the air. I know there's a lot said about what Trump's doing and what he's not doing, and a lot of people are concerned about him shaking his saber. Or rattling his saber, however you want to call it, but right now there's nothing that has happened in the markets to hurt exports, regardless of how much talk has been talked. As much has gone on with NAFTA, as much has gone on with China, as much as going on with North Korea and Russia. People still want to buy our beef. They still want to buy our pork. They still want to buy our poultry. And as far as, you know, in the soybean market, there's concern that when we if we come up with these tariffs on steel, well, what's China going to do? Well, are they going to say, well, we're not going to buy any more of your soybeans? Well, they might want to say that, but they're buying so many soybeans and they need so many soybeans in their market. It's going to be it's not going to be likely for them to do that. What are they going to do about beef? Are they going to say, well, we're not going to buy your beef? Well, who cares if China says that? They're not buying much of our beef anyway. Does it really matter? Well, we want to grow that market. Well, guess what? If they're not buying any of it, anything that you sell is a growth. You know, you can't go lower than zero. I mean, they are starting to buy a little bit, but it's still, in terms of total production, it's still zero.